How to trade support and resistance the right way. But wait, should you even trade support resistance? Isn't supply demand better or order blocks? I'm gonna give you today a full guidance on support resistance, supply and demand, and order blocks in this video. Let's go, friends. So, friends, this is something which most people are debating a lot in the Forex space, and they always have this problem. What is the better option? Support resistance or is it supply demand? By the way, just to clarify this upfront, order blocks or supply and demand is totally the same. There are a few who believe it's something different or you can interpret it in a different way. At the end, it doesn't matter. You have there a little bit of differences because people nowadays in 2024 they try to rebrand things so they can actually make it sound better, but that doesn't make the concept better at the end. So there are people who believe, hey, we're trading spot money concept, so we call it order block. And then there are people who say we're smarter than people who are trading support resistance, so we call it supply and demand. And then there are the newbies who are trading only support resistance. All right, so you see, we have a lot to talk today, so I'm gonna get it started. I'm gonna show you today a quick example about support resistance where I see the biggest problem with it, and you can decide by your own if you want to use this concept or if you want to use supply and demand. Let's go. So guys, we got this chart over here. It looks crazy, and the first thing that I'm gonna do as a support resistance trader is actually to go and hide it. There is that one option. You can come here, right click on it, and I'm hiding right now the chart. Great. Now I'm gonna do some support resistance analysis. I'm gonna now mark up here some random levels, as you can see, because I'm so smart. I know exactly what I'm doing, and now I'm marking up these things. Great. Now that I've done my analysis, I'm now ready to trade it, and I'm gonna just trade short and long when the price is hitting those levels. So I'm now open it up, and you will see now how accurate I am with the analysis. You can clearly see price here to the left when we start here reacted at this level, went from here till there, here, dropped over here. You see we only wicked below it, closed above, resistance, support, and so on. Resistance, from here we push from the support into this resistance, and so on. Look at this crazy, look at this, how good I am at pinpointing certain levels. And this is already the biggest problem that I see personally with support resistance. This should just be a joke, guys. Don't take this too serious right now. It is just that I want to showcase you here that most support resistance traders, they don't have a strategy behind it. They don't have a reason why they are marking up the levels. And for me, this is probably the most important thing in trading, that you have a system that you can replicate, something that you can use every single day, and you have a model where you just want to fit in. Support resistance traders are usually those type of traders where the majority says, hey, you are a gambler, because you are just trying to spot some pattern. And if you're a pattern trader who really just want to come here and just put these levels over it and then trying to say that there is a reason for it to come up higher, but you can't reproduce it in a different scenario at the same level, then something is wrong, because then you have only luck on your side and you don't have the statistic or the mechanical approach on your side. So you have to rethink that if you're doing this type of trading. So you need to have specific rules. And I think the rules for a specific supply demand or for an order block is much more easier to understand. I'm going to guide you through that, and I'm going to guide you right now through the problems, because the idea of support resistance at the end is, in general, if you spot this, is that when the price, for instance here, previously reacted at the support level, it's supposed to react at it in the future as well, which has no fundamental perspective, I would say. Like, there is not a fundamental reason for it to happen again. I think personally that the only thing that they're doing with support resistance is that they can catch luck, because the market is gonna probably react at it. But you also gotta understand when it's gonna respect support resistance and when it's not gonna respect it. By myself, I'm using some form of support resistance in my analysis. I just have a system when I want to use it and when I should not use it, right? But I think that the majority don't really have an idea about what that is. Especially what I've heard so often in the space is key level. What is a key level in support resistance? It's nothing that I've ever learned how to draw it the right way. I've always seen it that people who are very famous in this bubble said that, hey, this is a key level because the price respected it for 10 times or something. And then they just identified it and they expected that, again, when it's going to tap into it, it's going to respect it or it's going to break through it and you're trading away from it. So yeah, it might make sense to a degree sometimes, but at the end, this has nothing to do why prices are driving up and down. So you might get a statistical advantage if you can find an edge that you can reproduce the entire time. Otherwise, it's just gambling. I'm just saying it the way it is because right now what I've done here was purely gambling. At the end, I didn't know where the levels are. There was a lot of luck and still I could not argue to say, hey, I would take the short from here till here because there is a reason for it. All right. So yeah, it doesn't really make sense. But yeah, luck is definitely something that will be part of your trading as well. But now let me just explain you quickly what an order block is, what a supply demand is, and what right now the idea behind that was, because this is how I've learned it back in the days as well for the first time, what a supply demand is and what a support resistance. Support resistance is actually like prices now, for instance, moving up, right? And now it's finding here some form of resistance. So price is now actually what it's doing. It's now not respecting this resistance because this is the level where it taps into. So let me just mark here some level so you can spot it. This is the resistance, right? And now the expectation is we tap into the resistance. We want to see price from here reacting down lower. Great. If we don't react from here, right? Because there are a few options on how this can look like. This is just a scenario for the resistance, but if you are already a little bit a smarter support resistance trader, you would understand that there might be also the option that the price will not respect it, right? And the price will now just break through it. And now what they all claim is, all right, this is now my new support because we broke through resistance, and now I want to see price coming back to it, break and retest, right? And then just move away from it, which makes also sense. It makes sense that the price at a level is going to respect it and at a certain level not respect it, break through it, and then pushing towards that direction. But this has nothing to do with support resistance from my point of view, right? Like from a market perspective, from a market fundamental idea why it's driving like this. It's not because there is some line that you can mark up, right? Like a resistance, a level that in the past has been tapped a few times. That's not why in the future is going to do the same. It more than likely like this. Price is going to move from one point to another, right? Because this is at the end what we will see happening, right? This is when price, because of a fundamental reason, there are a lot of buyers who want to buy it because something happens or because this is what they want to have at that moment. And now price is going to increase because everyone want to have it, and therefore the price is going to increase. Supply and demand, very simple, right? In the theory alone. And this is why it's driving them from one point to another. This is what you're going to see at the end on your chart, right? Like in this example over here, it's moving from here till here. And now, yes, there might be a form of resistance that you've identified, but you need a mechanical approach to understand why that was and why that isn't. And then you will then understand, okay, this is a break and retest. You use here in this case that kind of concept that we break through it and that we're retesting that level and then we're pushing away, which makes absolutely sense to a degree, right? But you gotta be able to understand why that level is a reason for it and whatsoever. So I'm using this kind of concept by my own, right? But I'm not calling it support resistance. I'm not looking at this level in the past because that's what the majority are doing. They're looking at this level to get tapped a few times whatsoever so that it got respected. And then the expectation is, all right, we have 4 tests or 5 tests. Some traders would say this is a strong resistance, so you're expecting this scenario. Some traders will say, no, we're going to break through it because we've tested it already so often, so it's going to not sustain it anymore. And for me, this entire theory, just for me to make a decision every single time, is not really something that I want to use because it's not going to be something that you can reproduce again, right? Sometimes you will have luck, sometimes not. Yes, by my own, I have to decide if I think the market is right now bullish or bearish, right? I gotta have a bias for everything to know what I want to follow. So you can also in this case argue with that you're making a higher time frame analysis, and that is then your prediction that what you're expecting. That is fine, but I believe you have a lot of luck involved in a situation like this, and maybe you are going to be trapped in a bad luck phase, and then you're going to actually lose so much. And this is exactly why most of the support resistance traders will never get successful. So let's go back right now to supply demand. Let me explain you what I do and what I think a supply demand is at the end. Very basic and very simple. You see actually a price at the end being like this. You see a push down, and then you see a big push up, right? And then you have there a demand area that got created. So basically in candle language, you have a bearish candle dropping lower, right, like this, and then you have a bullish candle from here going up higher. Easy and simple. This is what we call a demand. And then you come here and you can then actually draw it from here, right, from the previous bearish candle till the low. You can then actually call this a demand zone, and the expectation is that when the price then pushes away from it, there is an order block, right? An institution has placed an order. This is why it's pushing up higher, and they want to defend that order, and the price is gonna then drop lower. We'll tap into it, and then the price from here will push away. The idea of this is actually mitigation, right? So a mitigation means that the price has to rebalance that area, because previously, in order for them to get into this long position, they had to take sell positions to trigger those orders, because the market works based on supply and demand. If someone wants to buy, he needs to sell. Someone has to sell it to him, right? So this is how then the relationship works, and how they can make this handshake, and how this order can be created. So in order for market makers, in order to trigger their orders where they want to buy, someone have to sell. And when they're selling and then the price goes above the selling price, which is here, the idea is that they want to come to return to those orders so that the sellers can exit their position, so they can mitigate their position, and then they can stack on the long position. That will also create a healthy bull run in this case, right? A bullish move, because you can't just see explosive movements to the upside, because there will be no balance, right? So you gotta actually then come back. This is why we always speak about, we want to see impulsive movements followed by corrections, right? This is a healthy bullish market, and for instance, right? Or a healthy bearish market when it's doing stuff like this. We can't just see price only dropping or only pushing up. This is gonna happen at some point, but more than likely, this is what we want to avoid, right? So this is a demand, and a supply zone is exactly the opposite. You see them pushing price up higher to trigger some orders at the top, or to bring price up higher so that more institutions, market makers, and so on are gonna willing to sell, because this is for them then better. They can then sell at a premium. This is exactly what they're intending to do, and that creates then in this case here a supply zone. And what you want to see is then price, right? It could just drop lower first, then come back to a mitigation, and then expecting price to go lower. And you see, this for instance makes more sense from my point of view. But now, back to support resistance, guys, because this is exactly where you can see an advantage for supply demand over, for instance, support resistance. Support resistance traders would say, hey, this is my support resistance, because this was, for instance, if let's say price now here chilled a little bit or whatsoever, and then this is how it looks like, they will call that this was previously here a form of resistance. We broke through it, broke down, and this is now, for instance, here a new resistance, right? Because you broke through it. So this was previously here a support. It pushed away from it, broke through it. This is a new resistance, and now you see price coming back to this level to do also a kind of a mitigation, and their expectation is to see price from here dropping lower, which is fine if you see it like this. But the problem that most resistance traders will have then is actually to understand how far will this actually move, right? Because most support resistance, they're trying to then catch this move from here. And at the end, this movement can also look like this, that we go up higher all the way to the top and then go lower. And for them, they will identify then this back as a new break, and then we'll see, okay, this is now a break of resistance. This is now a new support, and they're gonna try to buy. So they have here an issue that those ones, the supply demand traders, will look to sell, while the other ones are gonna look first for a sell and then for a buy on this situation. So you have there a few variations, and I think you can get trapped here very, very fast in a situation that you don't want to be trapped in. And I'm gonna go right now over some examples to show you what I believe. Yes, support resistance would make sense to a degree, but you gotta have other concepts to catch the move, like for instance supply demand. So I've learned it, for instance, that way, very basic and simple. Just to show you, this is resistance, right, for instance, and this is where they want to see price respecting it. Now what will happen is resistance traders are trying to sell it from here. This is the idea of it, selling from there, putting stop loss like this, and then you will see price breaking through it. Great. Now you will say, great, we have a breaking structure, we're gonna expect price from here to go up. And that will not happen, because price actually now, and this is the theory of the supply demand trader, because we understand that there is that one candle that we just marked up prior, right? The bullish candle, like this, the bullish candle, followed then by the bearish candle. And then what price is doing is actually right now coming all the way to this top level, rebalance here something, mitigate, and then it's gonna drop away from here, right? And then their initial idea was correct, but they get trapped because they believe now this is a break in structure, and they believe this is right now a new support level that just got created here, and price just melts through it, and then it comes back, and then it's dropping like this. And this is how they get multiple times confused in a situation like this, and this is how I learned it back in the days. Until now, I'm still exactly the same opinion like this. This is why I don't like to mark support resistance levels, especially because you can't just identify each structural level as a support or resistance. That doesn't make any sense. For me, that is literally liquidity. This is how I use it, and it's not gonna work that it's gonna give you a POI, a bias, or whatsoever. You're gonna actually get misconfused. If someone has a rule for that and know exactly how to follow that, and it's profitable, if you backtested that over the last couple of weeks or months, okay, it might work. I don't really think so. I think that this is gonna do you more harm than good. All right, so let's just go 1-2 examples quickly to end this video, so I can actually tell you more about this. If you are interested in actually joining my mentorship, where I can teach you all of these things, everything in a course, plus I'm giving you daily forecast analysis, and I'm also live trading with you guys. I'm telling you when I'm entering and so on as well. Plus, very important, we're doing Zoom calls. Zoom calls where I'm breaking down everything on the most recent price actions, so you will always understand how to use the strategy the right way. And now let's move on. So guys, basically, very simple. An example like this for support or resistance would be, this is, for instance, here, multiple resistance levels. You can mark this as a resistance, this as a resistance, this as a resistance, and so on, which is crazy, right? But what I can do, for instance, is to call this everything a big supply zone, because this is a supply zone on the higher time frame. This is a supply zone, for instance, here, as you can tell, on the 1 hour time frame. It's also supply zone on the 4 hour time frame. It doesn't matter how you want to mark it up, right? Here, perfectly big bullish move up and followed by a bearish down movement. This is let me just make it a little bit more beautiful, just for you to see it better. This is, for me, for instance, the supply zone, right? So I want to see price from here, for instance, reacting, if it's respecting it. It doesn't need to respect it, but it can respect it. And on the lower time frames, you can clearly see a lot of resistance levels, right? Because you can come here and say, this is my resistance, this is my this. So you need a rule for that, and it doesn't matter which one you use. The market is just gonna break through it. And people then again will try to see this. Let's just make an example like this. Let me just use a different color. This, right? You broke resistance, great. So you're expecting it now, when it's really closing above, or whatever rules you have for that in place, you're looking to buy, correct? You're looking to buy. What happens? Price pushes through it. What happens then? Pushing away from it. So it's playing a lot with you. For me, resistance is the ideal liquidity. If I see price running this, right, for me, this is fine. I know, okay, retailers get run, and I know they will run all of these retailers, right? Every one of them will lose their position. As easy as it is. And you see the supply zone perfectly. There would have been a nice setup. You see, for instance, breaking structure or something, and then you could take a beautiful short all the way down, big exposure whatsoever. And you have a ton of examples like this. Also here, for instance, whenever you see price coming all the way to the extremes like this is in this case, these are order blocks, right? This is demand zones. And what happens is actually resistance traders, they will come here and say, wait a little bit, but this is my support resistance key level or whatever. I can't even really mark them out perfectly because I'm not used to that anymore, because I'm not using this for a very long time anymore, right? But it's something very risky, I would say. Also here, look at this. This is a resistance level because look at this, it's having a lot of touches. Others would say, no, it has so many touches because it's gonna break through it. It's breaking through it, but what happens then? This is now supposed to be your new support, correct? What does happen? It's just breaking through it. Why does it do it? Because there is a supply zone on the higher time frame over here, for instance, and everything works on the lower time frame as well as it does on the higher time frame. So I hope that this makes sense, guys, and that you now have a little bit different view on support resistance with supply demand. If you want me to show more examples regarding this, just let me know and I can make a part 2 video of this. Should be just something where I'm actually tipping on the surface a little bit, trying to explain you the difference between support resistance and supply demand. And with that being said, guys, see you in the next video. Thank you.